Alrighty, sweet. What we're going to go over now is just a trade breakdown. So I'm going to show you exactly how I would come onto the market and just basically walk you through how I trade, and then we'll get into the different bits and bobs as we go along, right? So first and foremost, what I want to do is I want to generate bias. Now, I come onto the daily chart, and I've already set this daily fair value gap out last week because I still believe that that is where it's going to look to go to at some point. So I also have this button. So this is today. So this is 17th of November, 4:54 p.m. And I'm looking for this fair value gap here to also be filled to the halfway point. And then from there, I could look for a setup to go down, or I could look for a setup to continue to this daily fair value gap, right? So what I'm going to look for first is just the market structure, right, of the daily. Now, it's very, very rare that we ever see anything else but bullish. Right, but just looking at it already, we already look bullish. The reason being is because we have these clustered lows down here, and we failed to go below them like so. And to get down here would just take a long time. So we truly are just very bullish on NQ. What I next look at is I look at all the fair value gaps that are currently in the market. Now we have this daily fair value gap that I'm looking to go to, and we also have this daily fair value gap to cut through. So this has to be disrespected, and what I mean by that is we have to close above it on the daily chart. All right, it doesn't matter if a lower time frame is closing within a fair value gap on a higher time frame. That doesn't affect the higher time frame, it only affects the lower time frame market structure. So in this case, what I'm now looking at is what is being respected and what is being disrespected. All right, and eventually these two things will become one. Right, what's being respected, and what I mean by what is what sort of, like, who's winning, buyers or sellers. And how we know this is there highs and lows forming, or is there lower lows, lower highs, right? But then how I trade is I'm looking for these fair value gaps and seeing what's been respected. Now, looking at this chart here, I have this daily fair value gap as some sort of target, and then we have this fair value gap to get through, right? We're printing a very large green candle, and there's no big wick at the top yet because we're live and this is the current day, right? But I'm looking for this to come in, close, and then continue upwards. However, it doesn't mean that that's going to happen. It can hit the 50, it can come back down, it can make a higher low, and then it can start to travel its way up to there. Alrighty, so in this case, we've got this fair value gap here that's been disrespected. So that's been closed all the way over. All right, so that is bearish for me. And that is the most recent fair value gap that has been formed and disrespected. Now, we can have a look down here, and there's no fair value gaps that are being respected. We've only got this big one here. That's been disrespected. So at this moment in time, bearish is being respected, and vice versa, right? So there's that. If this was the case on the other side, then it would be the other way. So looking at this candle here, very much looks like the same market, just on a smaller scale. We have this low, we have this high, we have this high. This is a higher high, and then we've made ourselves a higher low here. Now, when we corrected from this point of the market here and made this lower low, we also made this daily fair value gap within here, right? And this is the market being respected, right? And because it will take me 1 minute, I'm just going to go through and I'm going to look for some sort of entry when that happens, right? So I'd wait for the daily to be hit. So I'll just go back in time. Coming down to the 15-minute. Right. This fair value gap, or this grey area here, this is the daily fair value gap. So I'm waiting for that to be touched. Okay, that's where it was. So it's touched the first time. So I have to go back to there. Then when the area of interest has been touched, I'm dropping down from the 5, the 4, the 3, the 2. And I'm looking for a fair value gap for my inverse. You can see one here. So if we get a close above here, which we did, that's where I buy. Break evens here, like so. Stop loss at the low here. I've got a feeling it's going to be a break even trade. It's either a break even or a loss, because we're obviously seeing the next candles. They absolutely dump. So let's just see what happens here. Right, cool. So that's the break even. So we'll just put that in a bit of profit here. Just say 275. Then from there, we just wait. I'd say, well, we've got to go for at least like a 1-to-1. But there's just so much, like this can turn it around. That would be like my all-time, and I really doubt that that's going to make it there, but let's see. Okay, cool. So that was a break-even trade. Right, then, simply put, we just wait. So we drop back to the 15-minute. I mean, alternatively, you can take a 5-minute, 4-minute, 3-minute, or just whatever fair value gap you give us. So it gives a 2-minute there. If that closes, you can sell here. And this is obviously flipped. So the 1-to-1 would be there. Oh. Like so. You put your stop loss there. And the only reason why I'm shorting this is because I know it's going to go there. And I'm just giving you an example on what sort of trade you can take. That would be your break even past this low. Right, which is there. So there you would go break even. And then that should work. Boom. All right, cool. So that was a break even and a successful trade example, right? So that's why we looked for these areas of interest. Now going back to the live chart, I'll show you exactly what I want to happen again, because obviously I can't show you that. I can only show you that in hindsight, not forward testing, unless we're live trading. Alrighty, so my areas of interest are still these daily fair value gaps, which is exactly what you just saw down here. That was being respected. And then we're seeing whether or not this bearish fair value gap is going to get disrespected, and we're going to head back up, right? So then I'm dropping down to the 4-hour, and I'm having a look and seeing the same things, right? What is the market structure? What is being respected? Let's just put this here. So drop down to the 4-hour. Right. So these big lows and highs here, this is more the daily chart. The 4-hour is kind of like this part of the segment. So we can really start to see that over the short term, we are starting a downtrend. And we're definitely in a downtrend, right? So you would definitely say, let's see this low here, this low to this low. It's technically a higher low. So we could go short-term bullish. So this leg here can be bullish if buyers can get above this high or even this high. But we really want to be aiming for this high. We want to be printing a higher high, then printing a higher low and continuing there. Sellers have all this room to step in order to make a lower high though. Okay, so here's our low, here's our high. Right, we've got this so far. Bullish trend, then we drop down, make that lower low, then we make a lower high. So technically this is all bearish short term. But now we're starting to make higher lows here. Plus we've got this bigger low there. So short-term bullish. So I'm going to deem this we're going to go neutral. Okay. The reason why we're neutral is because we are short-term bearish, right? So we technically are only bullish or bearish when we start to put in two or more of the same. So we've put in a lower low, right? But we failed to put in higher highs. These little pullbacks here, they're not really lows. They're just small little pullbacks on a big leg that can take us to being overall bullish. Alrighty. So 4 hour is neutral. Now, what is being respected? Okay, so then we look for the fair value gaps again. So we've got this one. Bang. Now, do we have any more? We do. Got this little one in here as well. Bang. Beautiful. This is awesome. So this is adding more so to the bullish side of things. The reason being is we have this 4 hour fair value gap that has been disrespected by the buyers, right? So we've fully closed that out. Then we've also came down and retested it twice. And from that, we have this massive reaction to the upside. So this tells me that there's a lot of buyers in this area because we have this low that's been protected, right? And then we have another low that is showing massive signs that buyers are winning in this area, right? We still have all of this to go because we really need to get up here and start printing higher highs and higher lows. But seeing as we've put this low in, the market really is in a state where it can come down here and then look to come up here. So I would be focusing something around here as my entry point. So in this case, on the 4 hour, bearish is being disrespected. We've got this 4 hour candle about to disrespect this fair value gap. So if that's to close in the next 2 hours, then this is where we can start to see this fair value gap as the target, which would align with my higher target of the daily fair value gap, which is up here still. All right, so this would be a short-term target if I was to take longs after this is closed. Then I drop down to the 1 hour. So the 1 hour is just going to give us more and more data. The hourly, I'm really looking short-term, okay? We know that this is all 4 hour. Now we know that this is going to be more of the hourly because the shorter the time frame, the more compact the data is going to be. We don't want an elongated 1 hour over the span of 30 days. We only want to have like, a couple of days worth of data. And then we're going to define the market structure based off that. Alrighty, so looking at this very simply, we have these fair value gaps here that have both been disrespected like so. So bearish is being disrespected, bullish is being respected. Now we don't just go off that, we want to see other confluences being respected. Now we have this hourly fair value gap, right? This is being respected. So you can see price came in here and then buyers stepped in heavy, and from here pushed this giant wick up within this hour, and then we've only printed higher highs and higher lows from there. And now the next one that hasn't been touched sits very nicely with my target of the 4 hour and the 1 hour at 25,515. Okay, so this is another confluence and more liquidity in an area that I'm already looking to target, which is really, really good. So for the hourly, I'm going to give this bullish. Alrighty, the reason being is we've got these key lows that are coming in. 1, 2, we've got this high, we've got this low. You can see volume starting to kind of slow down a bit because we're not getting like big swings. We're getting these small little highs and lows. But overall, we're very bullish. I probably will want to see this swept later, and then this will kind of be an area of interest of mine again. This 50%, or we also have an hourly fair value gap here that can be swept just based on what the market wants to do. We are on a Monday, which means we don't have a lot of volatility. However, who knows what happens. We're here to just observe, not guess. Alrighty, dropping down to the 15 minute. So the 15 minute for me is very, very, very crucial. This is where I gather most of my market structure. The hourly, the daily, I'm finding confluences like fair value gaps, and obviously I'm looking at the highs and the lows of the daily and the of the higher time frame. We're looking at the lows and the highs, but my market structure for when I actually trade and when I look to take entries is very much the highs and lows of the 15 minute. The reason being it's very, very clean to read, and I see massive, massive changes when highs and lows are taken on the 15 minute. So very much a big fan of that. Alrighty, so we've got, just from looking at this, we've got all these lows down here. You can see a lot of activities happen. You've got this high that was nearly protected, so that rejected here, and then we've absolutely smashed through it now, which then this can be used as some sort of support if we're truly going to be like super, super bullish. If not, we'll probably come into this area here, and the reason being is because in this area, when we push through, we created this fair value gap. Now, there's only really one or two things that happens with a fair value gap. It's either respected or it's disrespected. So when I say respected and disrespected, it's either used by buyers as a little jetpack, little jump pad to continue, or sellers step in and then use it as an inverse to get back lower. All right, so you can see here this 15 minute has touched into it already, and then it's starting to see buying pressure go the other way. So if this was somewhere that I wanted to get into an entry, I would look on the 5 minute first, and I would see if there is an inverse fair value gap created within this leg here. So we see this big drop into my area of interest. I drop to the 5 minute and it has this fair value gap. Now, I will simply just wait for this to inverse, and then that could possibly be my entry. However, I have a quick look through the 4 minute. So we've got this 2 minute start to close here. I don't really like the look of that because there's no real break-even point, okay? So if there's no real break-even point, then I have to basically buy this and hold it to there, which is basically going to be my take profit. So this doesn't really look like a trade that I would take personally. If this was to close here, then it's just going to look rather ugly. I'd rather this come up, make a high, higher low, drop down, wick these lows, and then I would look for an entry to get in based off that. All right, I really hope this prints in the next 2 minutes as I'm making this video, because then you can see me make my analysis looking at this bullish, neutral, and then looking at the 15 minute, we've made an uptrend for the whole day. I'm bullish again. So if this was a nice trade, I definitely could take it. However, this is what I want to see. I want to see this high, respecting this 5 minute, then it comes down again, and then within that manipulation leg here, back into the zone. Then I would take a smaller time frame, like a 3 minute or a 2 minute, because it gives me a clear break-even point based on that high there. Okay, but simply boiling it down, all we're looking for is a continuation of the trend, but I would look for this. That's what I would look for in this case, or this. All right. Cool. Sweet. So that's how I break down the market. That's called a top-down analysis to a lot of people. But this is basically, how I just go through my day, figure out exactly what the market is showing me. Not what I want the market to do, what the market is showing me that it is doing. Remember, all we do is we simply come onto the market and observe. We observe what the big boys are doing, what the big institutions and economic market makers are doing, and we simply just want to ride the coattails of that. And they show us this every single day by these things that we've just went through. Cheers.